Well, housing payments may be getting more affordable, but don't expect rates to fall much more. Our next guest says lenders have already priced in future Fed rate cuts. Joining us now is Jennifer Beeston. She is the Senior Vice President of Mortgage Lending at Rate. Rate is a mortgage company that offers a variety of mortgage products, personal loans, and insurance. So, Jennifer, let's start there. You say a lot of this has been priced in. Does that mean whatever we see next week, whether it's a 25 basis point cut or a 50 basis point cut, is that not going to move the needle at all with mortgage rates?
So what you need to take into consideration is that right now people are expecting a 25 basis point cut. If that happens, I don't expect rates to change from where they are right now. If we saw a 50 cut, I would expect them to go down further. But what's interesting is that rates don't just follow the Fed. Rates have come down so much since last year, and I don't feel like Americans know that.
So how much has the mortgage rate fallen over the last year, like you just said, and how much more is that saving people when it comes to a tangible monetary amount?
Right, so I took some notes. So like October 2023, we were at about 7.8 on a 30-year fixed. Now we're at 6.25. So if you think about the average home price in America, and look, some markets are way more than this, and some are lower, but the average price is about $500K. If you look at October to now, we're talking about $520 a month in savings. That's huge. That's changes how much people can qualify for, but most importantly, if they're comfortable. And that's what we're looking at a lot right now is, are you comfortable?
So given all that, you say it's time now to look at refinancing options for people who, quote, dated the rate and married the house. But is there an ideal time to refinance, especially if the Fed, if that holds up, the expectations hold up, that they continue to cut rates through the end of the year? Should folks wait?
Look, it depends on your individual situation. So like I would talk to a loan officer right now. I've been chatting with a lot of my clients, and what we've been talking about is, hey, I can save you 1%, 1.5%. Like government loans have dropped so much, VA, FHA, that we're seeing these huge savings. And then it's up to the borrower. Does it make sense now, or do I want to gamble and leave money on the table? Because with the election coming up, there's a gamble, there's uncertainty. Even though the Fed's saying we think we're going to be cutting rates, who knows what's going to happen in November? So
right, and how does that TBD factor of the election play into the mortgage rate story and really the housing story at large?
I think that, well, look, you have some people that are waiting until the presidential election to go shopping. You have other people that are waiting to see what pans out because there's such different housing policies. So I think right now we're in a really good moment where rates are great, and I think as we get closer to the election, we're going to see more and more volatility.
So I know there's no crystal ball when it comes to how low rates could potentially go, but is there a magic number of sorts that if we hit that, we might see more demand, more uptick in activity?
Yeah, so I think that most people expect that when you see that 30-year at about 5.5, you're going to see people get really, really excited. I would argue that where we are now is really interesting just because even in October of 2023, people were buying houses. So I think the best advice for people who are thinking about buying a house, you can't time the market. If you could, we would all be doing that. So see what works best for you, see what payment you're comfortable with, and see if you find a house you like. Don't wait for the election, don't wait for a magic time, a magic day, or a magic number, because it's going to depend on your individual situation.